Ladies and gentlemen, yesterday the Magnificent Seven stocks have crashed so badly that they have lost almost $800 billion in market cap. And this could spell the end of the belief in the AI bull run and the AI story. Let's watch on and see whether this will spill over to the rest of the S&P 500 and also the collision of the perfect storm that could drag down the stock market. And this could be the opportunity that crash buyer like myself and some of you have been waiting for. So let's just watch on and I'll give you my thoughts and recommendation. So the title of my message is The Perfect Storm Has Arrived. And by the way, this is not my message. Many news agencies are now saying that a perfect storm has arrived. So I'm just resonating what they have said. So before you think this is fear mongering again, this is just somehow resonating what people generally thinking about. So the question right now is this the beginning of the next big crash that we've all been waiting for? So let me break down into three phases, Act 1, Act 2, Act 3. Now, let me bring you back to Act 1 in April to June. At that point in time, there was a war going on between Iran and US and Israel, and the oil prices went up at high. It was about $120 a barrel, and there was inflation fears, oil volatility, there was shipping disruption, and so on. But strangely, the stock market kept going up. And this is where we all realize that this is the story of the powerful AI bull run. So everybody kept believing that Nvidia is the story, Microsoft story, Meta, Alphabet, Amazon. So in short, the Magnificent Seven, which are all the high-tech stock, were literally carrying the S&P 500 and the Nasdaq up, while the rest of the economy get hit by Iran, Israel, and the US war. But fortunately, at that point in time, it was doing well. Well, today, things are different. So we are now facing a second Middle East conflict that's expanded now not just on the Straits of Hormuz, but also on the Bab el-Mandeb straits as well. So two straits are now being shut down. Oil prices are going up, and this potentially will lead to high inflation and, of course, higher bond yields. And this is always bad for stock market. Now, the AI spending also come under scrutiny. And of course, there's a market sell-off globally right now. So let me talk about the problem number two, which is the AI spending. Now, this is not exactly a bursting of the bubble, the tech bubble like what we've seen in 2001, but somewhat it has got some resemblance of it. People are not questioning whether there's profits to be made. People are now questioning whether the profits are enough to justify the high capex they are spending. So right now, the world is now asking, Google, why are you spending so much money? Facebook, why are you spending so much money? Microsoft, why are you spending so much money? And Tesla, why are you spending so much money? And everybody is getting now worried that this spending doesn't justify in terms of the profitability that they're expecting in future, and they're selling it down. So yesterday, in one session, about $800 billion of market cap were lost, and that's largely due to 7 stocks. And this is quite serious. So the bull run, in some sense, is doing reality check. And I think the people are not buying the dip anymore. Just to give you some numbers, this is the Magnificent Seven from all-time high. So Tesla is now down 35.9%. Now, if you think that Tesla is generally a volatile stock, which it is, going down by 35%, not a big deal. Take a look at Microsoft, it's down 30%. Meta is down 23%. Alphabet is down 22%. Amazon is down 16%. Nvidia is down 12%. Apple is the only one that's somewhat holding strong, and they're all falling, no exception. Okay, and this represents a serious note. Now, someone might ask, Mr. Lu, how come if these are falling, S&P 500 haven't fallen too much? Well, that's what we call sector rotation. People are selling down these stocks and buying other stocks from the S&P 500. The question is, will this last? Well, Act 3, Asia has joined the sell-off. So we now have across the main tech countries like Japan, Korea, and Taiwan, they're all selling down their stocks. The one that's hit most badly is South Korea, and their Kospi index is almost down 30%, and they are in deep bear territory right now. The Nikkei is down 12% from the high, and so is the Taiwan going down as well. So they are now leading the way in a market crash. And if the US were to follow them, then that will be a disaster. So this is why I call it a perfect storm. And there are three independent storms now colliding together into one. And this could be catastrophic for the stock market. And let's hope that this will not spill over to the economy as well. Then that will be disastrous for jobs and salaries and so on. So just to be very clear, the first storm of the perfect storm is the geopolitical crisis, which is the war in the Middle East. Oil prices going up, that will lead to inflation. Inflation will lead to high interest rate. Interest rate rise, that will be disastrous for stock market. Second is the AI bubble, which is now being kind of, I wouldn't call it burst, but fizzle out. And people are just questioning whether the high capex spend justifies in terms of the future cash flow that's coming in. And third is the Magnificent Seven structure is not so magnificent anymore. And this is quite worrying. So the Japanese and the Taiwanese and the Korean index are all falling as a result. The worrying thing is this. In April, we had AI as the antidote for the problem that Donald Trump caused in the Middle East. But now, AI is part of the problem, right? So there's no more heroes. And I think the only hero that could emerge, unfortunately, is Donald Trump himself, in a sense that he will go back and manipulate the market and see whether he can push up the market again. He has done that 38 times the last time. He could potentially do it again, and it usually worked to some extent. But I'm not too sure whether this time around it will work as effectively as the last time. So my conclusion is this: market crash is not guaranteed, but the risks are clearly materially higher right now. So what should we do? Obviously, right? Build up your reserves. You don't have a lot of time to build up your reserves right now. Assemble a reserve, check your SRS, ordinary account, cash position to make sure that is piled up. Avoid leverage. Leverage is a very dangerous thing. And many Korean investors are now burned by leverage. And that's something I always believe we should never touch leverage. And if you are holding on to globally diversified index funds and so on, I think that's quite safe to hold on. But other positions, I'm not going to comment on that. I will consider that something that normal investors should not be touching, because I'm always believing that we cannot beat the market. So I think it's important for us to develop a crash buying strategy and line up what you need to do ahead of time. You don't go in a war, then you figure out what to do in the war. You go and prepare all your battle plans well ahead of the battle. So I think this is important. You need to know what you want to buy, at what price, how to buy, okay, and so on before the panic strikes. And if you don't do all this, you may be part of the panic. So prepare well, and I think it's something that we all need to do in advance, okay? So with this, I'll see you in the live stream, and I hope that we can see whether this thing will come to pass or this is something that will just breeze away as another false alarm. Okay? Thank you, and I'll see you tonight.